Chapter 8, Banks and the Magic of Finance. Question answers from class 7, subject Social Science, part 2. The big questions. Question 1, what is financial infrastructure and what does it comprise? Answer, financial infrastructure is a network of institutions and systems that allow money to flow smoothly in an economy. It helps people, businesses, and the government manage their money and perform financial transactions. It comprises banks, where we deposit and borrow money, payment systems, systems like UPI, credit debit cards, and net banking, stock markets, where shares of companies are bought and sold, other institutions like post offices, NABARD, and the Reserve Bank of India RBI. Question 2. What are the main functions performed by banks and how do they impact people's lives? Answer. The main functions of banks are accepting deposits. They provide a safe place for people to keep their surplus money. This impacts people by keeping their money secure and helping it grow through interest. Providing loans, credit. They lend money to people who need it for education, buying a home, or starting a business. This impacts lives by helping people achieve their goals even if they don't have the full amount of money upfront. Facilitating payments. They allow people to transfer money easily using checks, cards, or mobile apps. Question 3. How does financial infrastructure contribute to a nation's progress? Answer. Financial infrastructure is essential for a nation's growth because funding projects, it provides the money needed to build physical infrastructure like roads, railways, and bridges, supporting businesses. It helps entrepreneurs turn ideas into reality by providing credit, loans. Economic flow, it ensures that money moves from those who have extra savers to those who can use it productively, borrowers, which keeps the economy healthy and growing. Let's explore page 194. This picture is from a bank. What do you think the people are doing? Ask your family members if they have visited a bank and learn more about the activities there. Answer. I think people in the bank are completing different activities such as depositing money, withdrawing cash, filling in forms, collecting passbooks, and in availing other banking services. I asked my family members about their visits to a bank and they said they have visited several times for activities such as depositing money, withdrawing cash, and making payments. Think about it, page 196. First, why does Navdeep think that saving at the bank is better than keeping cash at home? Answer. Navdeep thinks saving at a bank is better because safety, money kept at home can be lost or stolen, whereas a bank is a secure institution. Earnings, interest, money kept at home stays the same amount. In a bank, the money grows because the bank pays interest to the depositor. Question 2. Can Navdeep and Rima lend to each other directly without the bank? What could happen in that case? Discuss. Answer. Yes, they can lend to each other directly, but it comes with risks. Trust issues. If the borrower Rima is unable to pay back the money, the lender Navdeep might lose their savings. No legal record. Without a bank, there is often no formal record of the transaction, which can lead to disputes or arguments. Lack of security. Banks act as a trusted middleman that ensures the lender's money is safe and the borrower is held accountable. Think about it, page 198. How does one track so many transactions of deposits and withdrawals? Answer. One tracks transactions using a passbook, which is a diary like document provided by the bank. It lists every single receipt, money coming in, and payment money going out. Today, people also use mobile banking apps or internet banking to see their transaction history instantly on their screens. Question 2. Observe all the particulars under the expenses, debit, and income credit. Why is keeping records of financial transactions important? Answer. Keeping records is important because monitoring spending, it helps you understand where your money is going, expenses, debits, accuracy. It allows you to check if the bank has made any mistakes in your account. Planning, it helps in budgeting and planning how much you can save for the future. Proof, it serves as legal proof that a payment was made or received. Think about it, page 209. Why do companies issue shares and why do people buy them? Are there any benefits of owning shares? Answer. Why companies issue shares? Companies need large amounts of money to grow, build factories, or develop new products. Instead of borrowing a huge loan, they divide their ownership into small parts called shares and sell them to the public to raise funds. Why people buy shares? People buy shares because they want to become part owners of a company. If the company does well and makes a profit, the value of the shares increases. Benefits of owning shares: profit, dividends. Companies may share a part of their profit with shareholders. Growth: if the company's value goes up, the person can sell their shares for a higher price than they bought them for, earning a profit. Questions and activities. Question 1. What is financial infrastructure? How does it complement physical infrastructure? Answer. Financial infrastructure. It is a network of banks, payment systems like UPI, stock markets, and other financial institutions. It helps people, businesses, and the government manage money and facilitate financial transactions. Complementing physical infrastructure. While physical infrastructure, roads, railways, telecommunication supports economic activity, financial infrastructure provides the funding needed to develop and maintain these vast systems. Question 2. How does having a bank account help people? Should everyone be required to have a bank account? Answer. How it helps: safety. It provides a secure place for savings compared to keeping cash at home. Earnings. Savings earn interest, allowing money to grow over time. Access to credit. Accounts allow people to take loans for homes, vehicles, or businesses. Direct benefits. Wages, scholarships, and government subsidies are transferred directly into accounts, reducing middlemen. Requirement. While the textbook emphasizes that every Indian should have access to a bank account, like through Jan Dhan Yojana, it highlights that banking makes financial life more efficient and secure for everyone. Question 3. What could be the possible advantages and disadvantages of compound interest for savers and borrowers? Answer. Savers advantage. Compound interest leads to exponential growth. Savers earn interest not just on their original deposit but also on the interest earned in previous years, making their money grow significantly over time. Borrower's disadvantage. If a borrower does not repay a loan promptly, the interest also compounds. This means they may end up owing much more than the original amount borrowed because interest is charged on the unpaid interest as well, implied by the power of compounding. Question 4. How does financial infrastructure enable the flow of money between households and businesses? Can you think of how the government can facilitate this flow? Answer. Flow of money. Households deposit their surplus money savings in banks. Banks then lend this pool of money to businesses as loans for machinery, raw materials, or expansion. The government facilitates this through the Reserve Bank of India (RBI), which sets rules and regulations. Schemes like Jan Dhan Yojana bring more people into the system, and institutions like NABARD fund rural development and farming. Question 5. What could be the reason for the higher interest rate earned on fixed deposits as compared to a savings account? Answer. A savings account allows the depositor to withdraw money frequently with some monthly limits. The bank must keep this cash available. A fixed deposit (FD) is a one time deposit kept for a fixed period, example 3 or 5 years. because the bank knows it can use this money for a longer duration to lend to others. It rewards the depositor with a higher interest rate. Question 6. Sahil received rupees 10,000 as a prize in a poster making competition. His father promises to pay him 12% interest per year if he does not spend the amount. After 3 years, how much money would Sahil have? Answer: Sahil's interest calculation. So friends, here principal is rupees 10,000, this one. Rate of interest 12% per year. Time 3 years, 3 years. Following the compounding example in your book, end of 1 year, rupees 10,000 plus 12%, that is 1200. So friends, 12%, 12 divided by 100 into 10,000. So 20 cancel. So here comes 1200. So we have written 1200 here. So 1200 plus 10,000 is equals to 11,200. End of 2 year, this comes here 11,200. So 12% of 12 divided by 100 multiply by 11200. So 20 cancel. So 12 multiplied by 112 is equals to 1344. So that is why we have written here 12% rupees 1344 and plus 11,200 is equals to 12,544. Then end of 3 year. So 12,544 here. So 12%, 12 divided by 100 into 1344 is equals to 1505.28 after solving this. So 12,544 plus 1505.28 is equals to 14,049.28. I hope you have understood this. So Sahil would have approximately 14,049.28 after 3 years. Question 7. How does the stock market help mobilize the savings of individuals? In what ways do companies benefit by issuing shares? Answer. Mobilizing savings. Individuals buy shares, part ownership, in companies where they expect the value to increase over time. Company benefit. By issuing shares, companies can raise large amounts of funds for their operations and growth without taking a traditional bank loan. Question 8. How can we balance the convenience of digital payments with the risk of cyber fraud? Answer. Convenience. Use systems like UPI for fast, secure and 24/7 transfers. Risk management. Stay safe by never sharing OTPs, PINs or passwords with strangers, avoiding unknown links or suspicious apps, reporting any fraud immediately to the 1930 helpline or the National Cybercrime Reporting Portal. Question 9. Ask your family members or neighbors about how they save money, whether they use UPI, ATM or checks, the kinds of transactions they perform through UPI, do they find UPI better than using cash or not, and why? If they or their acquaintance have experienced digital fraud, for instance, through a fake call or message asking for bank details, what did they do when they realized it was a scam? And what did they learn from that experience? Summarize your findings in a table or short report. Share one surprising insight with your class. Answer. I asked my parents and neighbors about their money habits. Most of them save money through bank accounts, fixed deposits, or digital wallets. They use UPI for quick payments because it is faster and easier than cash. Some people prefer ATMs for withdrawing money and use checks for larger payments. One neighbor experienced a fake message asking for an OTP but did not share it and reported the number. The most surprising insight was that many people now prefer UPI over cash because it is more convenient and safer. Question 10. Create a financial safety poster. Design a poster with do's and don'ts of digital banking safety, for example, not sharing OTPs, reporting frauds. Include emergency numbers or websites like this one or 1930 helpline. Hang the posters in school corridors or the library. So friends, you can design a poster like this Be a cyber safety superhero. The do's list: protect your pins, check your balance, lock your phone, update bank apps. The don't list: never share OTPs, ignore win links, no public Wi Fi, no screen sharing. The emergency zone. So, friends, you can create a poster like this. Question 11. Checks are often used to pay utility bills. Ask your parents to allow you to fill out the checks for a few monthly payments. So friends, you have to do this yourself. Fill a few sample checks under the guidance of a parent. While filling out the checks, I wrote the date clearly, entered the name of the person or company receiving the payment, and wrote the amount in both words and figures. I also signed the check in the space provided. This activity helped me understand that checks must be filled carefully to avoid mistakes and ensure proper payment. Question 12. Suppose you have to withdraw rupees 10,000 from your bank account. How would you fill out the cash withdrawal slip at your bank? Let us try below. So friends, you have to withdraw rupees 10,000 from your bank, and this is the cash withdrawal slip. Observe the sample withdrawal slip and fill the details. To fill a cash withdrawal slip, I would write my name, account number, date, and the amount I want to withdraw, which is rupees 10,000. So friends, here as you can see rupees 10,000, here 10,000 in words, 10,000 rupees only. Here comes account number, here the signature of the account holder, here name of the account holder, and this is for official use. You don't have to write anything here. And here the branch name of your bank, and here date. I would also write the amount in words, sign the slip, and attach it with my passbook before giving it to the bank cashier. The cashier would verify my details and then pay the amount in cash to me. Okay, friends. So, with this, we have completed all the question answers of chapter 8, Banks and the Magic of Finance. We have already studied notes and summary of this chapter. You can find the link in the description and on the screen. If you like the video, kindly like, hype the video and share it with your friends. Also subscribe to my channel and press the bell icon to receive new video notifications. We will meet in the next video. Thank you for watching.